Hello. Welcome back to Alpha Beta Soup, where we unpack Bitcoin using on-chain analysis. I'm TXMC. We've had quite a week. Price has been extremely strong, and it's important that we make sure the on-chain footprint for this rally matches our expectations. We will hop around to a few different charts today, but I'm going to try to keep this video on the more brief side because there aren't any huge revelations in this rally and everything seems mostly on track. With that said, there are 2 or 3 little factors to be aware of over the coming days. If you're enjoying this content, please give the video a thumbs up and make sure to subscribe to my channel. If you hit the bell icon next to the subscribe button, you'll be told about all my videos the moment they come out. Let's get right into it. We'll start with the price chart. I mean, look at this rally, friends. To start October, what a strong beginning to the fourth quarter. October 1st gave us this fat green candle right here. We spent a couple of days building support and off we went. We put on our Fibonacci retracements that we've been using here. You can see we finally broken this 702 level that we've spoken about a few times. We had closed a daily candle well above the 702 retracement. This is a key retracement level for crypto rallies. Many are broken in this area and rejected. Seeing a daily candle close well above that is a confidence builder. Because price ripped up so quickly, I wouldn't be surprised to see a bit of a correction over the next couple of days, maybe a back test back down into the 50K range. A bit of chop wouldn't be the end of the world. It's something that naturally happens when you appreciate in price very quickly. There's always a bit of a correction. You need to bring new buyers in. You need to give people an opportunity to get into the market, because if the price just takes off without them, it increases the likelihood that those left holding are going to take profits. This looks very strong. I would expect a bit of chop and uncertainty in the price for a bit before we make the next leg up. Next key spot to break is the 786 at 57,000. And then after that, it's pretty much blue skies to the all-time high. If we look here on the hourly chart, you can really see how quickly this rally took off. We've obliterated the August high. We obliterated the September high. And also we'll look here at our weekly chart. This was our bull flag that we've spoken about. We got the first candle to make a new high and off it goes. This is all very positive, but we know that what's happening on chain is where we really want to focus. So let's go check out the landscape and see what's been happening the last few days. Make sure that this rally has strength underneath the hood. The first place I want to start is with the derivatives market. It's important to point this out now. I want to get ahead of this. We are seeing elevated futures activity during this rally. The price has been going up the last few days, and volume in futures has also been going up. We have not been shaking out speculative volume during this price run. Additionally, the funding rate this morning has spiked back up to early September levels. See, this really is all on October 7th here as we film this morning. This is not immediately a guarantee that price is going to reverse, but this shows that some leveraged longs have taken positions in futures. Those are traders who have taken a position that price will go up, and they are taking a leveraged position. So they are collateralizing with crypto or a stable coin of some kind, and they're getting multiples of their buying power as a position, which makes them much more vulnerable to price going against them. Since the funding rate is positive, we can deduce that the people taking these positions are in fact long traders. They're expecting price to go up. So if there's any short-term price drops, this group of traders becomes very vulnerable. It's something for us to watch. These levels in the funding rate do mirror early September when we had a flush here on El Salvador Day. So I want to point this out. It's something to watch for over the next couple of days. If we were to get a quick flush candle back down to 50K or 49K, we'd probably see some of these guys get wiped out and then maybe clear the room for us to head back up and find new higher prices. Either way, this caught my eye this morning, and it's very important to watch this considering what we've been dealing with derivative effects for the most of this year. A quick check-in on the spent volume age bands. So here we're looking at coins that are spent each day that are 6 months or older. We watch these coins to make sure old hands are not looking to exit at a time that we're not ready for. If we see older coins coming to life, seeking exit liquidity before we start reaching euphoric volume levels on chain, that could create an oversupply and overhead resistance for price. So far, this remains quiet. We've checked in on this chart continuously throughout the history of this channel, and I imagine we'll continue watching it going forward. It's a key part of our assessment of on-chain spending behavior. So far, no red flags, just one spike of activity here in late September, and it's been quiet since. You can see this is well below 1% of daily volume. A quick check-in on exchange volumes. So this is the net transfer volume from all exchanges. The green signifies coins going onto the exchange, and red are coins being taken off of the exchange. And this is a net flow. So it's taking the deposits and the withdrawals and showing you the difference here. So you're getting an idea of how the total balance of all exchange wallets is changing day to day. Note, here is our summer basin. Here is the rally in July and August. And here we are now. And if you look at the flows for exchanges, they are predominantly in the red. We're still seeing large net outflows in exchanges. This is positive. This kind of behavior is helpful for us to make sure that we don't have additional supply available for new buyers. Zoom in here a little bit. You can see there's a couple of days where we've had net inflows, but they've been quickly followed by net outflow days. So largely, this is an outflow. This whole period of time here is net outflows. This is the exchange net position change chart, which is just a related cousin to the one we were looking at before. This shows you that same activity on a rolling 30-day basis. And you can see here that we have been in net withdrawal, net outflows since the middle of the summer. There's a bit of a spike up here in the outflows. You can see that this value here is creating a bit of like an upside down triangle. That means that the outflow volume is tapered from where it was. Let me zoom in so you can see that better. The outflow volume is tapered from where it was, but it's still below zero. It would need to be up here for us to feel like exchanges were seeing inflows like they were back here in May. This is what it would look like. So largely, exchanges are still seeing net outflows. They are not seeing coins rushing to find an exit, rushing to find a new buyer. This is our entity adjusted chart. We've used this a few times, and this is showing us the individual participants on chain each day in the blue line and the amount of transactions they participate in with other investors in the orange line. And I wanted to point out this local spike we've gotten. Zoom in. Look at this jump in activity here, jump in transactions, jump in active entities. And we're now back in terms of total active entities into late May territory during the sell-off, when we really started to see buyers getting flushed out of the market to not return for the summer. This was our summer here. You can see the low basin of activity we've been in, and we've been watching it slowly climb. Well, October 1st really saw this value start to increase. This is exciting. If we continue to see this going up, like we did back here, that is a very positive catalyst for continued price growth, because that means new buyers are showing up to the market. Some of them could be new sellers that have gone dormant, but when you see large spikes like this and exchange flows remain neutral to negative, and we're not seeing old hands moving, we're not seeing old coins moving like on the spent volume age bands, then we can assume these are new buyers. Let's also look at entity adjusted transfer volume. So this is the USD dollar total of transfer volume between different entities on chain each day. In our last video, we pointed out how this had spiked, and we were hoping that it remained elevated. Well, it appears to have remained elevated, and we even see another spike up here in these last couple of days. This is great. I hope that this is not an anomaly. I hope that when they push FTX into the suite of existing exchange metrics, that none of this goes away. Maybe it will adjust down slightly, but the fact that we're seeing continued elevated volume here on the entity adjusted chart, which means that self-dealing has been taken out of this, internal transfers are taken out. The fact that this remains elevated is very positive, and you can see it's a level that we only saw at the height of the market earlier this spring. That suggests that institutional flows and big buyers are stepping into the market, because these values are in the multiple billions per day. You see, this is 12 billion, here's 16 billion. We're hanging around in this 14 to 15 billion dollars a day of on-chain transfer volume. That is very bullish. Here is entity adjusted SOPR, or entity adjusted SOPR. And SOPR stands for spent output profit ratio. It is the ratio of all spent coins each day. And as it's entity adjusted, we have taken out self-dealing. So if I moved coins from one address to another address and I was properly identified as an entity, that would just get ignored from the spent profit ratio. The reason I bring this up is because I want to show recent activity. Let's go ahead and zoom in. So the spent output profit ratio is only showing spent coins. If a coin sits dormant, it doesn't print a value on this chart. You can see if you follow the price here, as price was going up, spent output profit ratio was increasing. It spiked here in January, February. This is that top that we've broken down a few times on this channel. This is where miners sold, where whales sold, where long-term holders distributed most of their coins. And this was really the on-chain market top for this current phase here. This was where that activity really spiked, was this area here. Since then, the spent profit ratio has been declining. You can see we broke down into aggregate loss for most of the summer here. When it's below this black line, below a value of 1, then the spent profit ratio is in the negative. People are only realizing 90% of their cost basis, or 85% of their cost basis. What's important to see here is just how quiet this area has been as price has been going up, right? We saw a bit of profit taking here at the bottom, but over in this area, this has been very quiet. If we were seeing old hands realizing profits, selling old coins to realize gains, this profit ratio chart would spike heavily because all old coins are in multiples of profit. Basically, every coin before January of this year is heavily in profit. So if any of them were moving with consistency and with volume, this chart would be printing higher values. But instead, it remains kind of flatlined here. I mean, you can see tiny spikes, but generally this value is very low. And if you follow this horizontal line, you can see that where it is at the baseline of where it was for most of the bull run this year. So it has a lot of ceiling above it. The fact that we have seen price rip up into 54 and 55,000 in the first couple days of this month, but we're not seeing heavy profit taking, says to me that the current holders have no desire to sell here and that they want higher prices. This price is not juicy enough for them. After everything they've weathered this year, after all the FUD with China, with Tesla, with regulatory uncertainty, macroeconomic concerns, inflation fears globally, all of this stuff is weighing on people's uncertainty, on their fears, on their doubts. And still they remain confident about Bitcoin's future and its ability to create higher prices from here. None of these holders are letting go of their coins yet, not at a level that we would be concerned about. That's the takeaway from this chart, and ideally we would see this remain at a lower value until we get back up to the highs. Then we could expect to see some selling. We'd expect to see some profit taking. But down here, this is good. This is a slightly different view of what we were just looking at, but it's for short-term holders. So the previous chart was the spent output profit ratio of all entities on chain. This is the standing profit and loss ratio of just short-term holders. So at Glassnode, a short-term holder is a person who has bought their coins in the last 155 days. The reason that we would look at their profit and loss ratio is because these younger coins tend to be a good bellwether for the general profitability of the market, and they can give you an idea of when trend shifts might be occurring. So here is the all-time history of short-term holder profit and loss ratio. And this is the profit and loss of all of their coins, not just their spent coins like the SOPR chart shows. This shows all short-term holder coins. So anything that's less than 5 months old has a profit level of some kind, and it's represented here. If you watch this line and how it relates to the black baseline level here over time, you can see how short-term holders bounce off of this level as they gain support, and then when it moves up away from this level is usually when price is appreciating. In bear markets, when price falls, short-term holders find themselves in loss, and the profit and loss ratio goes into the negative below the black baseline here. This is a pretty understandable dynamic. This is just raw profit and loss, and younger coins do tend to have a higher cost basis since they were purchased more recently, so they're more sensitive to price changes. Price goes down, a bunch of short-term holders immediately find themselves in the red. But what's important is how this group digs itself out of loss. So here they are, right? They're digging themselves out of loss. They're digging themselves out of the 2014, 2015 bear market here, right? In loss. And they're trying to get back up to their cost basis. Here, we'll zoom in even more. They're trying to get back up to their cost basis. They get up to their cost basis and a few people sell. They see, oh man, I'm finally back to break even. Let me get out. They sell. They push the price back down and more of their cohort ends up being in loss. And this happens over a few times until finally the market is able to get itself back into profit. These short-term holders, these weak hands, find themselves back in profit. And when price comes back down to their cost basis, they say, wait, we like being in profit. We feel good about this market. We're going to step in and buy here because we see a value price. And when that happens in the aggregate, this group bounces off its cost basis and moves back up into profit, and price goes up with it. And as long as we stay in a bull market, short-term holder profit and loss ratio tends to just continually bounce on its cost basis. They never get a chance to spend time in loss, because every time price gets back down to their group cost basis, they step in and buy more because they feel confident about the current market and they know that higher prices are just around the corner. What we're seeing here are millions of people all thinking similarly, and their behavior plays out in this profit and loss chart. So that's generally how this chart works. But the reason I want to look at it is because of what's going on now. I mentioned before how short-term holders dig themselves out of loss. When they finally get in profit, they look for a bounce at the cost basis. Once that bounce comes in, it usually means that price will find support for a period of time after. And in a lot of cases, it ends up going on for months. In this case here, it went on for years. Back here in 2012, look, they dig themselves out of loss. They finally bounce off of their cost basis and it sends us into another bull market. Same thing happens here. Look, just briefly, they fall down into loss. They come back up. They bounce on their cost basis. They send us up into another bull market. Let's zoom in on the current market. Note how short-term holder profit and loss ratio caught support here in the middle of 2020 after being in loss for a period of months. This is the liquidity crash in March of 2020 that we've spoken about before that hit all markets globally. Bitcoin was not immune to this. But after this moment, buyers stepped in and they started accumulating coins. They started pushing the price back up. And whenever it started to flatten out, short-term holders found themselves stepping in and buying when price got back down to their cost basis, pushing price up and creating another run. Well, look what we just got over here. Here in 2021, we just caught our bounce. We just went down underwater for a period of months. Short-term holders found themselves back in the green. They had an opportunity to step in at their cost basis, and they have done so. This is very encouraging. And if this is true to historical trend, this means that we are in line for another leg of this bull run. If we just use this chart as our signal for the bull-bear cycle, it has very few false positives. Here, short-term holders fall into loss, they catch support, and we get a bull run. Here they fall into loss, they catch support, and we get a bull run. They fall into loss, they finally catch support, and they stay there, and we get a massive bull run. They fall into loss, they catch support, it pushes up, we get price appreciation. Same thing over here. This is probably the only really false signal that I would say. And it had a weak bounce. Let's zoom in here. It had kind of a weak bounce. It only really tested it once and then off it went. But here in 2020, we've gotten our bounce and off it went. Now we spent some more time in loss in 2021. We got our bounce, really a double bounce, and it looks like off we go. This is only one chart in our on-chain toolbox, but the fact that it has very few false positives historically, and we have just gotten the fractal that we've seen in previous bull markets, tells me that there's a lot of strength in this current market and things are looking very positive for a continued leg up, which would align with our supply squeeze thesis and our expectation that this market is not done yet. This last chart is showing something that we have lovingly named sovereign supply. So the sovereign supply is the total amount of Bitcoin that is not on exchanges. So it is the amount of Bitcoin that is held by individuals, whether they are short-term hands, long-term hands, whatever. As long as they aren't on exchange, they have sovereign custody of their coins. We can assume this. Here in blue is the long-term holder percentage of sovereign supply. The orange is the short-term holder percentage of sovereign supply. And the reason I want to bring this up is because long-term holders now have the highest percentage of sovereign supply that they have ever had. They currently have about 81% of the amount of supply not on exchanges. This speaks to their accumulation level, and it supports the evidence that we've been laying forth over the last few weeks that strong hands, dollar cost averagers, long-term holders, and all hodler types have been accumulating heavily all summer long and are owning more and more of the supply. There's less and less available for new buyers. This metric is showing you that in indisputable terms. Just as long-term holders now own the most amount of sovereign supply that they have ever owned, short-term holders own the smallest amount. Short-term holders only have about 18 or 19% of all coins that are held off of exchanges. Some of those coins will mature into long-term hands. They will sit for 156 days, which crosses the 155-day threshold, and they'll join this big blue group up above. The fact that long-term holders own the most coin that they ever have just goes to show the level of confidence that the current hodler class has in these prices. Despite all the corrections, despite El Salvador Day largely being a disaster for Bitcoin from a PR perspective, despite all of those things, these people continue to buy Bitcoin regularly and hold on to it. Not only are they keeping it, but they're putting it in cold storage, because that's what sovereign supply represents. It represents coins held in self-custody. The vast majority of it now is held by people with a long time horizon, with a low time preference, people who do not want to sell their Bitcoin. We do know that at some point long-term holders will begin distributing. It will likely be when new highs are created and their profitability is at peak levels. We expect that to occur, and it won't be a concern for us as long as we see volume continuing to grow as we looked at earlier. If our entity-adjusted metrics continue to expand, we see more entities, we see more active addresses, we see higher transfer volumes maintained. All of those things will help to absorb the supply that ultimately gets distributed from old hands when we create new highs at some point in the future. All right, so that is what I wanted to talk about today. The rally looks strong, but the futures market is showing potential signs that it's reaching maximum cabin pressure based on how it has performed in the last couple months. It's something to keep an eye on, but overall I still feel very confident about this market and where we're headed over the next couple months. I said I would keep this video on the shorter side, but it ended up being about as long as most of the others. I guess when you have things to say, you just need to get it out. I appreciate all the support you guys have given me on this channel. I'm having a blast making these videos. This is just such a cool thing to talk about with everyone. Make sure you follow me on Twitter at TXMCTrades. I post a lot of observations and analysis that doesn't make it into the videos. We'll keep an eye on things over the next few days, and in the following video, we'll make sure the rally's still on track. Until then, take care of yourselves, friends. Enjoy the October weather. We will speak again soon. Cheers.